Hello and welcome to FX Bully Academy. Welcome to this weekly forecast. We are back at it again. We are looking at the markets and what they might do for this coming week. Indeed, we are in the difficult market profile of consolidation where it is not that easy to actually predict what the market will do. But what we know within this profile, it is that when the market takes out the high, it then revert back into the consolidation. So as you can see, last week we were looking at the market, last week actually, the market closed lower, and then I was looking for the market to continue lower because of how it closed. And what then happened, the market went back to the highs again and then dropped back inside the consolidation. We have not broken out of this consolidation, but we can see that the market seems to want to be going higher as expected. We want the market to get out of this consolidation. Because of this consolidation, we don't really know to a certain degree and certainty what the market might actually do, right? That's when the market is very difficult to predict in a consolidation profile because you don't know how long it will stay there. But when it takes out the highs, it reverts back, and it takes out the low, it reverts back. So at the moment for this week, I'm looking at this market and I want it to get out of this consolidation. So when it comes to market profiles, you know how they work. It's either the market retraces into a key level and then it then consolidates within that key level and then it gets out, right? Or it consolidates above a key level, then manipulates into a key level, and then the market goes out. At this moment, this market is within a key level, which is a fair value gap, and we also have the order block key level at the bottom. So at this moment, the market might just decide to go higher. So it is very important for us to then look at this market with a grain of salt, knowing that we are in a consolidation. The market has been in this consolidation for more than 5 weeks. So in that way, we need to be careful when trading these and following market structure. What I then said last week, as I was looking for the market to go lower, and it was somewhere around these areas when it was going high, and then I said my target was that low, but if the market were to violate this order block, then that will tell me that the market wants to go higher, and that is what exactly happened. Right? If you were listening, you heard that. And I also said that I was not ignorant of this dealing range and that order block that it has been tapped, and the market was moving high, right? So with that in mind, also when the market violated this order block and came back to retest it as a breakup block, because how does a breakup block formed? You take out a low, you take out a high, then the market comes to a breakup block, gives you a setup in that area. You also have a change in the state of delivery. The market taps into that change in the state of delivery. Therefore, you're expecting an expansion, right? So the market taps into that, giving us a CRT in that area to push higher. The market then came back. This is where I positioned myself to go higher. When the market came back into this order block, when it came back there, a CRT was created, and my target was this highs, right? And the market went high, took out those highs, and then we revert back into the dealing range. Then we took out this as liquidity. Both these lows were taken out as liquidity. I don't know whether the market tapped into this fair value gap. Let me just check quickly. Yes, the market then tapped into this fair value gap, but I wasn't trading here. I was just watching at the market and seeing what it might want to do, because remember, when the market came and took out these lows, after this aggressive move, this order block over here, I was looking at it as a potential point of interest where our CRT should form, and we should have our entries going to take out that high and that high, right? So the market gave us that and only gave us 8 hours of trading opportunity, and we didn't reach that that area, right? And when this area was broken and the market broke below, then my mind is sitting and saying, I mean, we are in a consolidation. Probably the market wants to go more lower, right? And what I did, I then looked at this as an order block where the market might come and tap and go lower to these lows, because I was following structure. So in this area, I was waiting for a CRT to the low. So there was a CRT there that was formed, and I was confident that the market would go and take out the CRT low due to that type of analysis, right? And the market came in, gave us a CRT, a setup was given to come to the CRT low and that low. And with that, we was also looking for a continuation to the low, but that didn't happen. After taking out the CRT high, the market then came and then violated that high, right? Now we are sitting at that. The market now took out that high, and now we've just tapped into that high. So the market is very confusing. So you do your analysis, they will deliver it, but you cannot hold for long term. You just need to scalp with what the market is giving you. At the moment you are sitting here, you look at this as a sweep of liquidity or a break in market structure. From that high to this low, a break in market structure. We violated this, but that might be your POI plus fair value gap, and then now the market has tapped into that. Maybe you might be looking for this candle to give you to be a CRT candle, probably close at the top there strongly, and then gives you a CRT for retracement to these areas, or close above that high, give us a CRT, then we can trade it going lower into these fair value gaps and order blocks, and that can be a good play also. And we then wait. If the market then gets support from this order block and it goes and close above that, then the market would have gotten out of that consolidation, and then we can work with that going forward and targeting that high. But that high is too far. Therefore, these highs over here, these are equal highs that we would have been looking to go to. I think for this week, that's what I'm looking at. I'm looking for this market actually to get out of this consolidation, because we've been here for a long time. So that's it for this. I then did what I then did, because this market was in a consolidation. I then gave a FlipX. It's FlipX 1 on the daily chart. I said to you guys that last week that we have a CRT high, CRT low. The market is coming to the CRT low. I then said what is happening is that the market needs to come down here. We've taken out the high. That's bullish market structure. We've taken out the high, bullish market structure. Therefore, this is an order block. We have a fair value gap. So the market needs to come down, at least into that fair value gap, then we can start buying to the upside. Therefore, last week I said we are on there. We are selling. Why? If you look at your dealing range, where's my fab? If you are looking at your dealing range, we are in a premium. So what do we do when the market is on the premium? We sell, and then we buy when the market is in the discount. So because we're in the premium, I then said when you go to a weekly chart this week, that weekly chart, that weekly candle closed bearish, and then the following year closed bearish, right? And as it closed bearish, I said last week that the market was going to continue to the downside, so that we target that low of a monthly CRT. So we are still on that. I understand that the market has dropped, tapped into an order block, it's given us a reaction, but then the 4 hours, the one that will give us direction whether this weekly order block would hold price and actually push it higher from this discounted price. So we go to the 4-hour chart, and last week we had few opportunities actually when the market was coming down. The market opened here, it dropped, creating that order block, and from that order block we had a CRT forming for us, right? We have the CRT high, CRT low. The market went tapped, closed inside there, and the market dropped to the downside, right? And then we had our second opportunity from that order block where the market came, tapped into that. You would have dropped to your 1 hour to find your CRT to trade that to the lower side, and then the market came back to this newly created order block, and then it gave us a move of about, let me see, a move to the downside for about, let's just say 8 hours, if you will, right? 8 hours or so of a drop, and then the market decided to sweep liquidity and come back to the very same order block, right? What we are looking at, it is saying if the market can go start violating all these order blocks up until it takes out that high, then we might be convinced that the trend has changed and that weekly order block has hold price to push to the high. But nevertheless, we are still bearish. We're still looking for more downward movement. I hope you find all of this insightful. Until we speak again next week, do subscribe and follow and hit that notification bell, and also suggest other pairs that you might want to see us reviewing for the coming week.